a number of stakeholders gathering together in Paris today, including lenders, African heads of state, and of course France itself. But all of these different interests, what did they mean, and what was in it for Africa really? Well, earlier I spoke to Dr. Martyn Davies, who's the Managing Director of Emerging Markets and Africa at Deloitte. Dr. Martyn Davies, Managing Director, Emerging Markets in Africa at Deloitte. Thanks so much indeed for joining us. Welcome to the program.
Thank you, Peter. Always good to chat to you.
So this summit taking place in France, right off the bat, for me, interesting. We had Africa, China, Russia, Africa, and now France, Africa. What does that tell us?
Well, I think undoubtedly, Peter, there's some geopolitics, I think, underpinning this. This is the first real, head of state meeting that we've had in a very long time for obvious reasons throughout the COVID period. And to have it in person in Paris, I think, is certainly of even more symbolic importance. Clearly, the French are stealing a march. This is not so much an EU summit as it is a French summit. And stealing a march, and I think Britain would feel particularly left out in terms of this engagement. The politics around debt, particularly in Africa in this very trying time. And the theme of the meeting is around financing African economies through this COVID period. And President Macron of France talks about a so-called New Deal, post 1929 crash US style. Does now Africa need a new financial deal, or does it need a new structural reform deal, i.e. internally driven rather than externally dependent? I think that's a key point that we should be discussing.
All right, so a number of our heads of state have gone there. We'll talk a little bit more about perhaps the Western agenda, if I can call it that. But what do we want to get out of this gathering today?
Well, Peter, I think for majority of African states, some sort of debt relief beyond the already extended debt relief initiative through the G20. A lot of multilateral institutions have really failed to respond to the pandemic resultant economic crisis in effective ways. So G20 has come up in recent months, and I think there's roughly 26 or 27 African countries who have received this temporary debt forgiveness or debt relief. At the same time, many countries have not accepted that. Countries like Ghana, for example, thinking that this likely will also damage their creditworthiness from the three main credit rating agencies, and that's a very valid point as well. So I think a lot of them will go to Paris to, out of interest, say what is on the agenda really, and what potential debt relief from a sovereign perspective. We're not talking private debt here, particularly sovereign perspective, that the French government at the very least is able to provide. Most of its debt is particularly held in Francophone Africa, less so for countries like ourselves, amongst others. But as you say, Peter, China is the elephant or the dragon in the room here. And I think a lot of geopolitics or geoeconomics at play here between the French and how they're seeing to be able to manage debt issues, particularly around key infrastructure assets in Africa and financing projects, when compared to the Chinese, which have been relatively publicly quiet around the management of debt and rather engaged not multilaterally, but more bilaterally with specific African countries.
So, Martyn, they're talking the right talk, I guess, when they say this help, this assistance, relief, is to empower African countries to create economies, recover from COVID-19, but create economies that are inclusive and create growth. My question, though, is, before COVID-19, we had debt drama already. And for some reason, we keep going back to the same places. So whatever comes out of Paris now, are we not in 3-4 years' time going to be going back to the same place unless we change our ways?
Well, yeah, Peter, I mean, it's an accurate, albeit maybe generic statement, but it's almost deja vu, isn't it? We have these sort of conversations on almost a cyclical sort of basis. And undoubtedly, the COVID pandemic and resultant damage to GDP has exacerbated many countries, not just Africa's, but many countries' debt to GDP ratios, which is of course very, very challenging, particularly in a relatively low growth environment. To grow out of debt, one needs strong GDP growth and strong private sector growth as a result. Now, provocatively, in South Africa's case, is our existing debt levels, our debt to GDP levels, so high and approaching a so-called fiscal cliff? Is it because of the pandemic and resultant economic shocks, or is it a pre-existing condition that talks to lack of structural reform, the phrase I mentioned earlier? I think coupled with these conversations, and this has been the IMF's mantra for decades now, must come structural reform, private sector growth, strong GDP growth, and the like. And I think in South Africa's case, particularly so, a situation, obviously us being local know very well, is any talk around debt forgiveness or debt relief must be coupled essentially with structural reform. And as I often say, structural is a euphemism for politically difficult to do. So I think we certainly do face a crisis in many respects, some economies more than others. But whatever financial relief we may be hearing about post meeting today taking place in Paris, I want to see a strong domestic agenda, a sovereign agenda by African states to really, do whatever they can internally to manage their own economies in a more effective and sustainable manner.
A lot of hope is being pinned upon the African continental free trade area. And I suppose this is going to be the political will that's required to get any kind of foreign assistance and all of that to actually get some traction in terms of a continental economy.
Look, it's I think undoubtedly the most positive initiative that has taken place, albeit initially postponed, but most positive initiative has taken place throughout the COVID period. From a trade perspective, and arguably trade anywhere, has been the proposed African Continental Free Trade Agreement. While most economies are sort of being a lot more protectionist, disruption in supply chains, a lot more import substitution strategies, Africa still remains committed, at least in terms of political rhetoric, towards liberalization. At the same time, we're seeing in certain African countries' cases, South Africa as well, how do you reconcile an import substitution strategy, which is what's happening in many sectors, whilst having a commitment to regional free trade? And I think that is something which we really need to think long and hard about, because we can't have both. And I don't think import substitution equates to an industrial strategy. I think beyond free trade, we do have despite the high elevated debt levels of many African sovereigns, we are seeing a sort of a less risk aversion or in recent times, and this is also reflective in terms of the credit default swaps, which effectively is pricing the risk of sovereign debt. So I think we have strong commodity prices. There's much talk of a commodity super cycle taking place, and this will provide a strong tailwind to GDP growth. But beyond GDP, strong GDP growth for commodity-driven economies often masks the lack of structural reform, effective pro-business reform in these economies' own these countries' domestic economies, and that is something. Let's not waste a good crisis. The statement often is through COVID. We have some strong tailwinds. We really do. They haven't filtered through yet in terms of growth, but this should also support. It should support increased liberalization through free trade, but most importantly, structural reform domestically.
All right. So the French drink a lot of coffee, and a lot of it comes from Africa. And I just wonder, is it in their interests, honestly, to have a continental free trade area where Africa is trading with itself and perhaps not exporting as much to France and other European countries as it's done before?
Look, I'm a market fundamentalist, and Peter, and I strongly believe that a rising tide of trade lifts all economic boats. So we should trade with African countries, should trade with themselves. They should trade with whoever we possibly can. And just to boost commerce, it's the time to liberalize, time to effectively build more market economies of scale. Smaller countries in Africa, which on the surface are economically unviable, need to sort of integrate, if you take de facto integration with neighboring economies, but at the same time enable market access by reducing non-tariff barriers, the lack of application of rules, the nonsensible application of rules at times, and of course the hard infrastructure story and soft infrastructure story, services with hard infrastructure. It's a long game. It really is the long game. The model here is the European Union ultimately, which liberalized flows dating back half a century or more around flows of product, flows of capital, flows of services, and contentiously flows of labor, i.e. people. We need to have these conversations and more beyond conversations, applications of policy in Africa. So that's our North Star. We can look at experiences in Southeast Asia, ASEAN, of trade liberalization and the benefits it brought into development and wealth creation. However, we can look towards Latin America, Mercosur, or Mercosul as often called, which really has not delivered. Decades later, the regional free trade agreement has not worked out. We need to mimic here ultimately the European, Asian examples of trade liberalization enabled by all the factors I mentioned, amongst others, rather than Latin America one, which really has not resulted at all in the initial economic promise of integration, rewinding 20, 30 years or so.
So international financial institutions are all there and wanting to help. And I say that in inverted commas because my fear again is, are we not just going to be enslaved? I'll use that word lightly to these institutions. And we know the relationship with them over the years, where if you're in their chains, it can be a hard slog.
Mm-hmm. Look, ultimately, this is the thing, but I mean, we're not going to. I think the narrative for Africa needs to change. If we rewind exactly 20 years, it's a generation now since we had the Africa Rising narrative that was underpinned by a strong commodity play, which is what we have now. Of course, I think I read in the news earlier that the recent crisis, ongoing crisis in Mozambique, northern Mozambique, will be discussed today in Paris as well. Many African countries have to get their own houses in order. What happened in Mozambique is simply unacceptable at any level. It has deterred significant amounts of capital investment into the country, a region that desperately needs it, and not to mention the negative knock-on effect on South Africa as well. So it's up to African countries to get their own domestic houses in order from a security perspective, a political perspective, and undoubtedly an economic reform perspective. And that will naturally attract capital. But it's about how do these economies bulk up in terms of market attractiveness for capital beyond just the usual stereotypical commodity investment, which is very capital intensive, but there's little trickle down economics from commodity investments in countries. And that's ultimately our challenge. There's no policy switch solution from COVID. It's a generational play. And COVID should not be used as an excuse for lack of reform or a type of the import substitution approach, but more from a more market opening, more liberalization, more pragmatic engagement by the state, and a much more pro-business approach going forward. And then you'll start to see results. That's the story of Asia. It should be the story of our own region as well.
All right. And perhaps finally, we'll finish with where we started. And you talked about geopolitics of this summit. And I just wonder if you think about who's been invited and $5 billion that's been given to Sudan, is France playing to try and get some friends in Anglophone Africa?
It seems to be, Peter. I mean, this is France arguably is the first mover in light of a post-COVID type world almost. I mean, we're seeing European countries led by the British, the others are sort of the EU, other European countries aren't too far behind in terms of vaccinations. The best economic policy right now of any country is called the vaccination. And we start those countries, as they move out of crisis, it's fairly obvious that the COVID remains very much an emerging developing world crisis. Think South Asia, think Latin America, think Africa, the global South. So the geopolitics, the geoeconomics of this is who will emerge from the COVID pandemic and start to once again think about foreign policy beyond domestic crisis, and be the first mover towards seeking geopolitical gains as a result. It seems to be France in this case. I think we're going to see a far more in the next year or two. We'll see a far more proactive approach by foreign powers. Think China, think France, think Germany, think the UK particularly, maybe even the US, engaging Africa to try and solve once again those cyclical challenges that we seem to have, Peter, that you referred to.
All right, so we may be hearing a lot of merci beaucoup in the coming days on the continent. Dr. Martyn Davies, Managing Director, Emerging Markets in Africa at Deloitte. Thank you so much indeed for your time.